Hi, welcome. It's Mary Ellen McGonagle with your weekly Edge show for Friday, June 30th. Today, as usual, I'm going to share with you where the market's closed, what we can be on the lookout for going forward, and also take a look at some of those headline news that drove price action last week. Also, we'll take a look beneath the market's surface, look at some of those sectors and underlying industry groups to get a better feel for where sector rotation is shaping up, and also a broadening out in the markets. Last up, viewer question of the week, and it's all about how to trade on news. And I will share with you one news item last week that impacted a particular industry group, and then from there some of the add-on stocks that you could capture beyond that news item. So taking a look at some of the news from last week, we did see durable goods orders in May show that the manufacturing side of the economy remains flat. However, beneath the surface, we did see orders for new autos pick up quite a bit. And this is one of those news items I'm going to share with you how you can look beyond that and benefit from the rally in subsequent stocks. Also, last week, we did see new home sales for May surge for the third month in a row. Continued robustness in that area. Also, consumer confidence jumped to a 14-month high as receding inflation is having individuals spend a bit more. Also, Fed Chair Powell spoke last week at two separate occasions, and his comments remained hawkish throughout the week. In other words, we are on the lookout for at least two more interest rate hikes. However, he would not be against more interest rate hikes, quite simply trying to get that inflation rate down to that 2% level that they're on the lookout for. We also did see GDP numbers coming in better than expected at 2%. So the economy is on very sound footing. And today, very good news on the inflation front with core PCE data. This is data that's very closely watched by the Federal Reserve, its personal consumption expenditures, and it did soften to 4.6% lower than the expected 4.7% rate. Next week, holiday shortened, but there is still data coming out, manufacturing PMI on Monday, and the Federal Reserve meeting notes on Wednesday. And on Friday, very critical June employment data will be released. So despite it being a holiday week, there is going to be some fairly impactful news that's going to come out. So let's go ahead and take a look. Where did the markets close for the week? And here we are with the daily price chart of the S&P 500. And we can see that this move into the mid-latter part of June did put the RSI, that's that relative strength indicator, into an overbought position for the S&P. We experienced a pullback last week, and presumably that was enough because we did get a nice downtrend reversal with the S&P 500 almost touching that 21-day simple moving average, and bullishness did return despite the Federal Reserve's comments. The resiliency there is quite constructive. We have the RSI above 50 trending higher, likewise with the stochastics. So at this juncture, we are still in good standing with that RSI, not quite in overbought position. From here, let's go ahead and take a quick look at the NASDAQ. And what I wanted to share with you is this more recent activity where we had this very overbought condition due to this rally in technology stocks. And this is another area where the last week's pullback was enough. We did see a little more of a pullback into the beginning of this week. The NASDAQ finding support at this upward trending 21-day simple moving average, and then a nice reversal and rebound as the broader markets, particularly the NASDAQ, remain in positive territory. So net, the markets are behaving in a rather bullish manner. And going back quickly here to the S&P, I'll go ahead and pull up a longer term chart and share with you that the S&P 500 is getting quite a bit closer to this high back here at the end of 2021. We're about 7.5% away. So really very constructive price action. From here, let's go ahead and take a look at those underlying sectors in the S&P 500, again sorted by that relative strength indicator, strength to weakness. And we can see industrials coming up here to the forefront. They had been in the middle to lower area as it relates to relative strength. And we did see a sharp rally last week, up 4%, moving this particular sector up here to the forefront. This is going to tie into some of the add-on to news play. And then also growth remains up here with consumer discretionary on those consumer spending and confidence numbers coming in strongly. Technology remaining up here at the forefront, and it did outperform last week, up 3.2%, pull back here to that 21. I'll share with you where the strength was in technology and basic materials. This was an area that was down in the lower quartile, now moving forward, and that was also up over 4% last week. Now, down here in these weaker areas, we can see utilities, healthcare, and staples. So those more defensive areas are residing down here, while growthier and then cyclical stocks are bubbling up to the forefront. Let's take a look at some of the other underlying areas beneath those sectors. I use select ETFs to really assist in getting your arms around what's taking shape in the markets. And take a look up here at the forefront, IGV. This is the technology software ETF. Similar to the NASDAQ, had gotten into an overbought position, but this pullback was enough. The group did experience a 3% rally, so more than the broader markets. And we can see that it found support at that 21-day simple moving average. Another strong area in the NASDAQ and in general in technology were semiconductor stocks, up 5% for the week. That momentum shift really never took place. We remained above 50 with that RSI, and we can see the support at that 21-day moving average and a nice continuation rally there. As we move through these subsectors, also wanted to point out to you XRT. This is the S&P 500 retail ETF, 3.5% rally. And the reason I'm highlighting these stronger areas is to share with you where those money flows are trending. Where is that strength? And as always, it's with an eye toward pointing you to the proper area so that you can then participate in the rally that is shaping up. Regional bank stocks did also perform well last week, up almost 4%, but not out of the woods yet. We had this downtrend reversal attempt that took place in the beginning of June. It did falter, and we are not back in positive territory yet again with the momentum. Despite that strong rally last week, not quite ready for prime time. So from here, I did want to share with you that new auto orders are really quite strong. So I'll share with you a couple of names that did in that auto space in the US market, had a nice rally. This is GM, General Motors. You can see that rally that took place last week. Also with Ford Motor coming out of this very lengthy base, higher lows, and a nice rally after this pullback. So with that in mind, had you not participated in a direct rally that took place in these auto stocks, you can always take a look at areas and stock that provide needed materials for these autos to be manufactured. And first up here is US Steel X. And we can see this nice downtrend reversal shaping up here. I'll go ahead and pull up a weekly chart and share with you that the stock was up 7% for the week. Of course, steel, a major component of auto manufacturing. Another name that we can look at here is CRS. This is another steel related product that also had a nice week here, nice base breakout here at that 55 level, momentum shift into high gear, positive territory. And from here, we can also take a look at some of these auto sales companies, and among them, AN, this is Auto Nation. And this particular name, in light of strong auto orders, you would anticipate that these sales companies of the autos would also fare well. And you can see AN breaking out of this nice 5-month base, momentum shift into positive territory. And from here, we can take a look at another auto sales company, and that is CarMax. Not quite as vibrant, but we did have that gap up, pull back to the 10-day, and seemingly in an uptrend. And another auto products provider is PPG Industries. And let's go ahead over to a different view using MarketSmith, and we can see that the stock experienced this nice lengthy base breakout. Also from here, I wanted to highlight that they make glass and chemicals for the automotive industry. So this was one of the reasons that we did see a move into those basic materials, those chemical and metal related stocks. That's it for this week. Everyone have a fantastic holiday week. Monday, of course, is a half day and Tuesday a holiday. And I'm going to look for you again here next Friday afternoon. Hey, Mary Ellen here with Simpler Trading. Thanks for watching the video. If you liked what you saw, go ahead and hit that like button and leave comments below. And if you'd like to be notified to future videos, you can hit that bell icon and subscribe. Don't leave without subscribing to my MEM Edge bi-weekly report. I do have a special trial offer. And for those who'd like to learn about trading live with us, you can go ahead to simplertrading.com to learn more.